Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, March 5th, 2012 is sponsored by Realtic. Alright, taking a look at the charts here, folks, you can see clearly the SPY, which is a ETF based on the S&P 500 is trading lower. We're just off the lows of the day. You can see the markets had tried to float up a little bit throughout the course of the afternoon, but each time they're failing. And you can see right here, you got above the 20 moving average on an intraday basis. We'll zoom in a little bit. And again, you didn't break up. Instead, you broke down, and now you're trying to float back up. So there's a general tendency for the markets these days to always float up late in the day on light volume, and light volume is exactly what we have today. So that's going to be the big question. Do we stay near the lows, or do we see that buy program late in the day that takes us basically to a flat day on the markets? Right now, the SPY is down 83 cents. Dow is down 40. NASDAQ having a pretty sharp drop today, down 31.5, and the S&P 500 down about 8.5. NASDAQ again leading the charge to the downside, down a little over 1%, and this is all on the back of Apple. AAPL is the symbol here. Apple getting crushed, down about $12 right now. But take a look at this collapse here, basically a little after the 11 o'clock, 11 a.m. time frame. A drop on Apple from essentially the 543 level all the way down to 526 as major volume hit here. Basically 3 to 4 million shares traded hands here on Apple as it collapsed almost $20. And again, this drop most likely triggering a bunch of stops on the way down, as well as a couple institutions, hedge funds unloading as well. And then once that unloading was done and the stops were triggered, the stock price bounced back pretty dramatically right to the 200. And now we're slowly fading back down. And remember, the iPhone or the new iPad is supposed to be unveiled this coming Wednesday. So there's a lot of people that are looking at it in terms of, can Apple really outperform what the market expects? And most people don't think they can. Expectations are just so high. And I think you're seeing some profit taking going into that on Wednesday, which actually will probably factor in a mediocre iPad instead of the best ever or the worst ever. It'll be kind of in the middle. It might be pricing it in as we speak. All right, so again, that's one of the main reasons why the NASDAQ is falling larger than the rest of the market, because Apple obviously makes up a huge percentage of that index. All right, now again, where Apple goes, the markets go, we know that, but there are also other keys in the market that are driving it up and down today, and mainly to the downside as we looked. If we go back to the SPY on an intraday basis, you can see the market's beginning to uptick. Look at the volume, by the way. It's very tough for the markets to continue to sell off when volume is this light in the afternoon session. I'm actually impressed that the markets haven't rallied back up yet, considering how light the volume has been since about noon, 12 p.m. But again, there you can see the pop coming in, which is not surprising. Look at the nice base build here, and it so far hasn't been able to break down. You could even make a case that you have a trend line right here. Let me put that in correctly for you guys. If we go to trend line and connect to low pivots, look at that. So you can see low pivot connected to this low pivot and then right there, and that seems to be the lower area of support on the markets right now. As the markets move up, again, let's talk a little bit about what went on overnight. China essentially came out and said we're probably going to only grow at 7.5%, while to most countries, most developed nations like Europe and to the U.S., that's a big growth rate. That's down substantially from what people thought China was going to be growing at. So that's causing commodities to collapse. You can take a look at U.S. Steel. U.S. Steel is a key steel player here. That stock is getting hammered today, down $1.23. It's bouncing off the lows a little bit, but look at that ugly sell-off on U.S. Steel. Southern Copper, take a look at this one, down 67 cents, also taking a hit on the back of that. And remember, the reason why, because China is a main consumer of these metals. All right, and commodities in general. So when China says, hey, we're growing less than expected, that means less demand for these metals, and therefore price must adjust to the downside. All right, taking a look at the dollar today, obviously a key to look at, and really the dollar for the most part is not having a significant impact on the markets. What you can clearly see is the UUP is essentially flat on the day to just slightly lower. Usually a lower dollar, if it was more sharply lower, would be helping the markets to the upside. That's not happening today, nor is a sharply higher dollar, which would cause selling in the markets, really happening as well. So the dollar seems to be a non-event, and we're now focusing more on China. And in all fairness, we need to talk a little bit about Greece. Greece, major news this week expected later. whether or not they can get their act together in terms of getting the full-fledged support of the bailout. And also, I think what's interesting is late last week, Spain came out and said we're not going to be able to cut spending like we had promised for the last bailout in 2011, which again, you have to wonder if that's going to affect things in the future, affect future money and future bailouts, which Greece obviously is going to get, or at least it looks like they'll get it. Now, the question is, does Spain, Italy, Ireland, and Portugal get that money as well, as they need to be bailed out? So there's a lot of issues here developing that we're seeing over the course of the European period here. And also now you add in China, and it is causing a little bit of angst in the market. And again, throw in not only China, but then throw in Apple dropping today, and we have a recipe for a little bit of a downward move in the markets. And again, you can see Apple bouncing back. And notice how 2 green candles in Apple, and I just showed you the spiders bouncing up as well. And again, here you have the spiders bouncing up 2 green candles as well. So again, you see how Apple itself is not only in relation to the Qs, the NASDAQ 100, the NASDAQ important, but also even to the SPY, the S&P 500. Right, it really is a major component of all these indexes, and wherever Apple goes, really the markets go. And that essentially is why, if you look at the chart, on the daily chart of Apple, look at the daily chart of Apple. It's gone straight up since mid-December here. And if you look at the SPY, which again is the S&P 500, essentially straight up since mid-December. So they really do track Apple. And if Apple starts to collapse back down more and more, then yeah, the market could be in a big trouble scenario here. All right. Now, a couple other things to go over here. Number one, for solar FSLR here. A lot of people are curious about FSLR, when the buy will be. I was asked quite a bit by members here at InTheMoneyStocks.com whether or not it would be a buy at this double bottom. And I kept on saying, guys, it's actually going to go lower. I have a master area of support down around $24.50 to $25. And sure enough, today, folks, the stock is down about $2, just underneath 10%, as it is breaking through the 52-week lows, making new 52-week lows on FSLR. And again, I will be looking to possibly pick it up at around the 24.5 level. If you want my exact entries, if you want my proprietary analysis here at InTheMoneyStocks.com, there's a 7-day free trial. 7-day free trial to the Research Center, which is geared towards swing traders, and the Intraday Stock Chat, which is geared towards day traders. You can take a 7-day free trial for one. You can take it for both. Doesn't really matter. You can do whatever you wish there. Okay? All right, so that's what we have going on there. Let's take a look at a couple other key stocks out there. IBM, very intriguing to me is IBM. Now, IBM surged through the $200 level, and this is one of the rare stocks that's green today in the kind of tech sector. It's a Dow component as well, S&P 500, and it went to a 201.19, pulled back below 200. Now it's back to the 200 level. I do have a master level to go short on this, but I have released it to the Research Center members. And again, I've given it to the Research Center subscriber members here at InTheMoneyStocks.com, and therefore I cannot release it to the public in this free video. All right, if you want that, take the 7-day free trial to the Research Center, and you can go find out for yourself. But this is a master level. Now, in turn with master levels, folks, I know a lot of you guys are intrigued by how do you figure out your master levels. Well, I'm not going to tell you how we figure it out, obviously, because that's proprietary. But what I will tell you is it works like a charm. Now, you might say, well, how does it work? Prove it to me. I'm going to prove it to you right now. Last week, I shorted Caterpillar. Now, proprietary levels, signals, and everything else had shown me that this level right here was a shorting opportunity. This level was a master level, and this was the 116 area on Caterpillar. Essentially, what I saw when I calculated out that Caterpillar was not going to go higher, and in fact was not going to get through this level, and it was going to pull back. Sure enough, if you go back to the 27th of February, I ended up shorting it. That was 1 week ago today, folks. I shorted it at 116.05 based on proprietary signals. I gave it out to the Research Center members as well. And sure enough, what happens? The stock collapses. And I took half off the table at my first target already today. 1 week, in 1 week, half off at a price of $109.55 for a $6.50 return or profit per share on CAT. Now, eventually it's going to go lower, and that's why I'm holding my second half with a break-even stop. But bottom line is, folks, this is how it's done. Members, no matter which direction the market's going, we're going to profit in this market based on the proprietary methodology here at InTheMoneyStocks.com. This is proof in the pudding. All right, members here made, I saw anywhere of up to 50% to 100% return on puts on Caterpillar. Anyone who shorted the stock with me made over $6 per share just in one single week. Think about that if you just even do 1,000 shares. I mean, you're talking about 6 G's in 1 week. And that's just on 1,000 shares. I mean, any member that does 1,000 shares or even 500 shares, you're still making thousands of dollars in 1 week. here I am doing about 5,000 shares and just unbelievable profits across the board. All right, guys. So again, I'm going to be releasing more. We have more trades out there. This is the time to be ready for the market to make major moves, and it's going to be there with profits galore for members here at InTheMoneyStocks.com. All right, let's just go back to the spiders here, folks. Let's take a look at the SPY. The SPY continues to kind of be just down a little bit today, but still inching up. Watch to see if you take this level right out here on the SPY. If you close above here on a closing basis on the intraday 10-minute SPY, look for a nice continued move up. Probably your next target would be right around the 136.80 level right up here. All right. If it stays below here, you could break down. If it does break down, look for a close below this orange sloping line here, and then you're going to go back to a double bottom, possibly even lower. All right. But again, bottom line is, all you need to know, 7-day free trial will lead you to the promised land where profits galore will shower you based on proprietary methodology here at InTheMoneyStocks.com. All right, guys, I got to get back to trading, making some more money this afternoon. Come join us here. In the Money Stocks is the website. Research Center is for swing traders, and Intraday Stock Chat is for day traders. Take care.